The second strategy that we recommended and that they implemented was what's called a charitable pooled trust. Now, this is a unique vehicle that offers some really cool advantages for the donor as well as for charity. Now, this is done after the business is sold. Part of it already is in a donor advised fund. The remaining part, the owners who sell get cash, and we recommended that they contribute $1 million of that cash into a charitable pooled trust. Well, why would you do that? Because the sales already occurred. The capital gain tax is now going to be paid. Well, because of the powerful application of this tool, they're able to avoid a lot of that tax and generate an income for themselves over their lifetime. So while they get an immediate tax savings of $200,000, they also get a lifetime income from the charitable pooled trust. So the assets now in that trust, about $1 million, can be invested to generate an income to them, husband and wife, or even onto a future generation if desired. What happens then is over their lifetime, they'll be able to draw about $60,000 a year of income for their lifestyle and their life needs. And the remaining capital, when they both relocate, remember, as Christians, we don't die, we just relocate. When they relocate, whatever's left in that trust then goes on to their favorite charities. So there's some really powerful applications here. They receive a lifetime income with investing wisely the assets in the trust. They have an unprecedented charitable tax deduction that's very unique because of our low interest rates right now, and I won't go into all the details, but there's a significant tax deduction, and it gives them maximum charitable flexibility. For example, if they don't want to use all the income in a year, they don't need it, they can even give the income to charity, so they can continue to multiply their charitable giving. So let's take a look at the whole picture and say, how does this all fit together? Well, this is their situation before we implemented these strategies. They were going to expend, as you can see in the chart, a little over $8 million for their lifetime income needs. They were going to pay, we estimated roughly $1 million in lifetime income taxes. They were going to give to charitable giving about $1 million, a little less than that. And they didn't have anything built into their plan for their family in the event of their relocation. So out of their gross estate, about $184,000 was going to be paid in estate taxes. They were going to have about $1.4 million of charitable gifts, and their heirs were going to receive about $8.3 million. That's over their lifetime. By implementing the strategies that we recommended and that they agreed made a lot of sense, their lifetime expenditures are actually going to go down a little bit, primarily because we've reduced their taxes significantly. You can see the difference here, about $300,000 of taxes versus the $900,000 that we were estimating. But look at the next point, over $3.7 million in charitable giving over their lifetime, a significant increase. And they designed some portion of their estate, $600,000, during their lifetime to transfer to their heirs. By the way, we often recommend that people consider some of their giving to their heirs during their lifetime so they get to see the joy and the blessing that they can do with those resources. So their total gross estate now is over $11 million because of tax savings and better investment returns. Their estate taxes, as you can see here now, are zero at their relocation. Their charitable gifts over their lifetime and then at relocation are $7.2 million, significantly more, and their heirs are going to receive about $4 million. So when you look at these side by side, significant impact here. Lifetime expenditures go down slightly, again, because they're paying less in taxes, significantly less in lifetime taxes. Their charitable giving goes up dramatically, almost $3 million of increased charitable giving, and their estate taxes are zeroed out. So that's a very powerful application of these principles and being a wise steward, stewarding all that God has blessed us with for His kingdom purposes, for His glory. Thank you, and God bless.